Hi, Jonathan York, Bay Financial Partners, looking at investment markets. It appears potentially there is another sort of peace deal on the horizon between the US and Iran. That all comes about from Trump sort of pausing his latest sort of attacks, saying Iran had called him and wanted to talk. Now the irony here is that Iran said there had been no such calls. There was no direct communication with the US, although they were talking through a third party. But on the back of the news that hostilities have been paused, oil fell dramatically and stock markets rallied. But certainly we've been here before, there have been many sort of, potential sort of ceasefires and pauses only for hostilities to resume at a later date. And potentially one of the sticking blocks appears to be Israel, who have bombed Hezbollah again overnight, despite Trump claiming that there was a deal on the table. So while we wait to see a deal actually put in place between Iran and the US, there is always hope that will materialise. Now the Fed left rates unchanged, which was probably sort of expected, but it was a 9-3 vote, which was certainly a lot sort of wider than anticipated. People thought it'd be a little bit closer than that. So Fed funds still remain at 3.5 to 3.75. And again, the statement was pretty short and concise, and still talking about the Fed containing inflation. Well, given inflation is running at around 3.1 at the moment, and their target range is 2%, and oil prices are still much higher than the sort of pre-Iran US conflict, it's just going to be interesting to see how the Fed actually can materialise the 2% target. And certainly US rates are showing no signs of backing off. 10-year is 4.62. The 2-year is 4.24. That 30-year well above 5% at 5.17. And indeed, most analysts and economists now expect the next move from the Fed to be up, which again won't please Trump. Trump also suffered a further setback as well, with the DOJ dropping the vandalism charges against the reflection pool. Attorney General Pirro came out and said that, no, it looks like the evidence now is that it was a faulty installation. Now Trump has now come out and criticised her, saying that no, there was still vandalism. There was a 300-odd foot cut into the lining, despite having no evidence to support that case. And also as well, it's come out that Capital One, the reason why they closed some of the Trump accounts back in 2021 was because of potential sort of anti-money laundering concerns. Now again, Trump claimed they were closed because it was him and they were politicising the banking, which is clearly not the case if there was AML concerns. Now, latest data on the US economy, GDP was a little bit weaker than expected, came in at 1.5. But so far earnings have been pretty sort of mixed really. A lot of the big tech companies, it was sort of split 50-50 between sort of better than expected results and then sort of worse than expected results. But certainly will be pretty interesting in the second half of the year. If we can get a sort of a deal on the Straits of Hormuz open, then potentially, there is room for a little bit further upside, although quite a bit of good news is priced into the market. And you've still got inflation concerns and higher rates. Also got the midterms as well. So as sort of mentioned, oil has fallen dramatically on the news of a potential sort of peace deal between Iran and the US and the reopening of the Straits of Hormuz. WTI back to 75.20 and change, and the Brent is below $80 at 79.40. Though Trump has now resorted to threats to Iran, saying they better sign this deal, otherwise the US will resort back to military action. Now the UK, Bank of England left rates unchanged. The vote was 6-3, which again probably a little bit surprising. but the base rate remains at 375. And just potentially, if oil does continue to fall, there is a possibility that you might see a rate cut in the UK before year end, which the economy desperately needs. Although so far the new Prime Minister, Andy Burnham, has been pretty well received by the markets. Now, the EU is still grappling with major wildfires in Spain, Italy and France. And it's just going to be interesting to see what impact that has on the tourism over the next sort of 4 to 6 weeks. Because certainly some of these fires could still be burning in well into November. Now in Australia, the RBA had a sort of a hawkish pause, if you like, and left rates unchanged. And that was maybe backed up by the slight fall in CPI in June, came in at 3.8 versus expected 4%. And with oil looking like it is going to fall now over the next sort of couple of weeks, potentially have we seen the peak in the Australian CPI? And if so, there is some potential talk about a possible rate cut before year end. Now here in New Zealand, cost of living for June quarter certainly rose. It was up to 3.2% from 2.1 in March. But obviously that takes into account the rising oil prices due to the Iranian conflict. And indeed, fuel costs were the major reason for the increase. And that's certainly the case been put forward by many economists that domestic inflation is actually pretty well contained. And when it comes down to it, New Zealand has no real control over the global energy prices. And given the next Reserve Bank meeting isn't until early September, potentially if oil does continue to fall, there may not be a case for the Reserve Bank to increase rates in September. And then the next meeting is late October, and then obviously the election in early November. So it's going to be pretty interesting to see what sort of comes out from the Reserve Bank. Interesting as well, business confidence actually rose a little bit in June, which was certainly encouraging out there. Also as well, some of the earnings reports that are coming through from some of the major New Zealand companies are reasonably encouraging. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.